Hello traders, Gary Wagner here, approximately 10 o'clock in Honolulu. Monday, the 7th day of October 2013, and this is the daily report for gold and silver. Although off of the highs today, we do have the precious metals markets trading moderately higher. Equities markets, of course, is down. Dollar index is down. Crude is down, but we do have gold up about $11, as you can see, $13.23 and change. High $13.29.90 and the low $13.08.20. We'll talk about both highs and lows in a second. Silver, remarkable climb, up almost 3% on the day. Gold's up about 1%, just shy of 1%, but 23.37 current print puts it up about 60 plus cents on the day. 22.58 on the low, the high, 21.57 on the low. We're looking at a 60-minute chart, and you can see by any stretch of the imagination, we have had a nice run in the marketplace itself today. Of course, the key right now is the fact that the United States government itself is in an absolute and utter stalemate in the marketplace itself. Now, the breakout to me is fairly substantial because it is above 1320. And to me, that's a pretty critical area just in terms of a band of resistance that we have seen lately. You can see when we look at this very, very short-term chart, ever since the market dipped hard to about, 1275, as it's come up on 1, 2, 3 occasions, it attempted to take out those highs, but it was unsuccessful. Now, on this last run down, it hit this low. The low today was about 1308. We're going to talk about 1305 because traders, you know that's an important support number that we have talked about before. And here's what I'm finding interesting. And that is the fact that we have been in this isolated or defined trading band or range for the better part of this month. The month has just started, obviously, but for the better part of this month, as we look at these highs roughly at 1320 and these lows just dipping at around 1300. So you've had this defined range, but we absolutely got a breakout today. Now, are we looking to enter the market from the long side? And here's my sentiment on that right now. My sense is that as long as this stalemate remains, and as long as we get closer and closer to the deadline, and the deadline unofficially right now is the 17th of October, if they continue, and they meaning Congress and Senate, if they continue to play chicken and are unwilling to talk to each other, on one hand, we could see this market spike substantially higher. On the other hand, the moment there is any kind of resolution in the market, we could see any premium that's being added into the market as we get closer and closer to this day erode within moments. So I'm expecting some increased volatility, but quite honestly, and I talked about this a little bit on Friday, had you asked me on last week or prior to this whole crisis kind of developing, I would have thought there would have been some sort of an 11th hour decision made that we wouldn't have gotten to this impasse. I'm frankly surprised, but I think the rest of the world is, and they're stunned because as far as I'm concerned, there is absolutely no choice as to whether or not we let the government default. It simply can't be done, shouldn't be done, and if it is done, it would be one of the greatest tragedies that the United States government has made. So I don't see that happening. However, I didn't see the current crisis unfold in the way that it did. So analysts and technicians are really put off at this point as to what to expect. I do expect something to come out in the days ahead. This is early in the week, but at the same time, there's no doubt we have the president, the Senate, and the Congress playing hardball. Now, before I put up some of our more technical charts, whether it has MACD, Fibonacci retracement, Elliott wave count, I want to look at a straightforward resistance line. The resistance line I'm going to simply draw from the tops of these particular highs that we got. I'm not going to genuinely go into the tails of them. I want to kind of account for the bodies. You can see it's a rough drawing right in here in which we've done that. You can also see very easily that we are right at that resistance point itself. And I think that that's what's important, because if in fact this market can break above this resistance area, and this is a longer term band from around 1400 down to about 1300, if we can see a break substantially above this resistance line right here, that would to me signal some sort of a breakout in the market and a breakout to the upside. We also believe that as long as this impasse continues to develop in the way that it is developing, we should see higher prices. So this is going to be my mark. As I said, as long as we were trading in that narrowly defined range, my sense was that I wanted to kind of stand on the sidelines and see how it unfolds. However, as I said, if we do get any kind of substantial break on a closing basis, we definitely want to be looking at this market. Now, all I have really done is remove the Japanese average as a study so that we can try to get a more exact sense or feel for where the market is in relation to this current resistance area, because you don't get true opens and closes on the candle length when you look at a Japanese average, because it's creating the candle by using a midpoint. So we really want to convert it back into this. You can see we had one high that tested it. That high was what, 1329. You can see that it came right up to the upper edge of this area, but has since backed down. But even on a 440-minute chart, we do have this nice ascent up. And again, we're looking at a compression in which we are seeing a series of higher lows and lower highs. Now, these lower lows and lower highs, as you know, we created, of course, I have uncompressed this so we can take a look at the bodies and where they're falling right now. But we looked at this upper level resistance area last week. We also drew in a lower level support. Now on the lower level support, what we did is we went from a series of lows here and this low here, and we saw last week that as this market started trading under pressure, it actually broke below there. You can see this is that piercing line that we talked about on a daily chart. We talked about the fact that if it confirmed on the following day, which it did not, that's that little red candle there, that would trigger a buy signal. What you can see now is that we are actually back within this compression triangle itself, and we could in fact see the market trade back to this point, and then as it approaches the apex, break to the upside. Would be strange, because typically when you get this kind of a break, you get a release in energy, and of course that release in energy will give you a pretty substantial drop or rise depending on which way the market moves on the breakout. So where are we pegging support and resistance right now? As we talked about, we're looking to see if it does break above the 22-23 area. We know that 29, when we drew in the resistance trend line, was really at the top of that resistance area. That's where that resistance area really kicked in. When we look at a fib retracement, I have one right here in which we are looking at this last rally from about 1275 to 1435. 76% retracement, 1309, right in here. You can see that we're well above that top in terms of where the market opened and is currently trading well above it. The next real level of resistance is going to be that breakout, starts at around 29 up to about 1333, and that's the real next area that we would want to look at. Should the market break above this particular resistance line, and this is part of that upward or downward slope, these descending highs that we're getting, that would really signal a fairly strong buy signal. You couple that with the candlestick signal that we got last week, which is this, the piercing line, that would give us our confirmation. We didn't get it last week, but that would give us our confirmation, and that would trigger a buy signal for us. So traders, I want to be conservative, because my sense on this is that we should see higher prices if we continue to get this impasse, but we want to be cautious about the fact that once some sort of compromise is reached, any premium that's been added to this market will quickly, very, very quickly erode. So what about silver? Looking at a daily chart of silver, and support and resistance are pretty easy to discern right now. Have one major fib retracement when we bring it in. We talked about the fact that it did come down. This is a 61% retracement. Absolute support just below $21. You get another band of support, and an important support level right now is $21.65. That is a 50% retracement of this move here. And as you can see quite eloquently, in terms of the midpoint, opens and has been trading effectively above that. We've got a nice rise in silver today, but look at where the highs came in and where it stalled. 22.47 is the 38% resistance level, and that is where our current resistance is. Now, in the same way that we're looking at gold and a resistance area or a resistance line that's characterized by a series of these descending highs, you really got pretty much a flat bottom in silver as opposed to an ascending bottom in which we saw a series of higher lows. That's what we saw in gold. But silver stayed fairly flat. You had some lows that came in here, but you get this almost flat bottom. And so my sense is if we break above the resistance area, and you can see that in terms of the short one, it already has. But if we get a signal in gold, we will certainly enter in the silver market. And in terms of support and resistance levels, these are the areas that we do want to watch. Upper level, of course, 23.51, but we really don't need to be looking at that recently. We're currently trading at 22.36, and we want to see how it reacts at about 22.50 first. If it can break through there, of course, then this would be our next target, 23.51. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday for another daily update review. Bye-bye.